the expectation about rates not falling is growing. I think that the changing buyer expectation and kind of the sentiment is important, and just the dealing with reality. Yeah. And I bring this up because I was having a conversation with a bankruptcy attorney a few weeks ago, and I was talking to a financial planner last week, and they both shared similar stories that you shared with me, which is there was a homeowner who had a lot of equity in their house. They ended up taking out a line of credit to pay off all their consumer debt, credit card, and stuff they'd been spending on. So rather than go the bankruptcy route, they used the home equity to solve the problem. Yeah. Rather than taking money out of the retirement account, they used the home equity to solve the problem because it's just so much. And so I think that despite the rate market being where it is, if you're a homeowner already and you're watching this show, your house is going to be, I'm going to say piggy bank just for ease of understanding. It's going to be your piggy bank for a little bit. If you have a super low rate on your first, the home equity line of credit or the HE loan, the HE loan, a fixed second is going to be a good solution for you moving forward into 2024 or maybe in 2025.
Yeah, exactly. I mean, the good thing about that, keep your same rate because it's low, right?
Yep.
And if we're going to get a second on there, 9, 10, 12%, whatever, you still have a low blended rate. Yeah. If you're really thinking about it in comparison to having all that credit card debt. And again, it's not a tax write-off when you have it as a credit card debt, but when you're taking interest in a certain way, it can become a tax write-off, especially if you're, doing it for home renovations and stuff like that.
Yeah. Yep. And that is how the rich stay rich.
Hello.
So any of you that are watching this segment of the show and you want to learn more about what's happening with home prices and inventory and all that, you can look at Altos Research for more of the nerd stuff. Yeah. You can call Memo and you talk to Lonesome Mike about that on your own personal situation. But let's close out strong today, guys. Let's talk about the data digest. Today's home buyers are seeking affordability not found in the West. I made mention earlier to there being this like migration. I was kind of soft selling the idea that we're going to talk about migration today and people leaving certain states and going to others. And wildly, the West is becoming less and less affordable, and there's a lot of people leaving the West.
Yeah, I mean, I do hear a lot of people now, they do want to leave California. But to be honest, as someone who lives here, and seeing that the home values are still, remaining high, I feel like that's a good thing for us, right? I mean,
yeah, it is. Yeah, I think it's a good thing too. I mean, again, like there's going to be seasonality to things, and again, affordability preventing you from buying. If your priority is I want to own a home, well then, if that's your number one thing, you're gonna have to go to a place where you can afford that. Yeah. But if your number one thing is I want to live in California, then you sort out, well, what do I got to do to live wherever it is? How much it's going to cost me, whether I rent or buy? And then I handle the other priority of wanting to be a buyer later or in another fashion. So I think it comes down to personal preference a lot. But the shift of kind of where affordability lies is not new. California has been one of the more expensive places to live, like Hawaii and New York specifically. In California, you got San Francisco and Los Angeles and Orange County and San Diego. New York, you got New York City, right? You got some places in Florida like Miami. You got all of Hawaii. So that's not new in that sense, but I do think that you're seeing migration numbers of people going from states like California to Idaho, Nevada, Oregon, Washington. Like you see some of that.
Yeah. Well, I tell you what, I'm going to leave California if McDonald's keeps getting pay increases.
McDonald's?
This $20 hourly rate. Chicken. If I'm going to go buy a freaking hamburger and it's going to cost me more money, I'm out.
Hey, you know what?
That's your breaking point.
I think they're paying that machine at the front when you walk in. They're paying that machine $20 an hour.
$20 an hour.
Push the thing.
How convenient. It's just crazy. But no, I tell you, a lot of people, we've actually helped a lot of people sell their houses here because when they got in their house, they're like, we're going to move out of state. Do you know a realtor? So we put them right back, to that person. If we didn't deal with that realtor, we'll set them up with somebody that we know is really good. Anyhow, they'll move to the other state and then they'll call me back and say, I think I'm going to go back to California, right? The weather and certain things that they don't like. And we see that it's very common that they go stay maybe a year, 2 years, and they're like, I shouldn't have sold my home. I should have just stayed in California.
It's hard to beat it here, to be honest.
Yeah.
Sometimes just having a lower payment in a home is not the best thing for a person.
Yeah, and that can be very situational too. In some cases, and I'll use my own family's example where part of my folks moving out of California was for two things: to be closer to our other family members, number one, and number two, to go into the retirement years where they needed a smaller place that was in line with what their position was financially for the remainder of their years. And so that was a much more the motivator than, well, what's the market doing? Where are interest rates at? What's the house price? It has nothing to do with that. It was all motivated by what do I want the best part of my life to conclude.
Yeah.
And that decision was driving that. And it was towards a lower cost, but also towards where do I want to be? Where do I want to wake up every day? Where do I want to spend my time? How do I want to spend it? And that was the driver behind all of that.
Yeah.
Yeah. So the West, I think, is going to be a haven for people who are, more, I shouldn't say more young, but on average, like you get a lot of young families here.
Yeah.
You get entrepreneurs. We have had some companies leave California, but we have some companies that are wildly successful in California for a variety of reasons.
A lot of them too.
That's right. And so, I think there's again, we always talk about this, but like every neighborhood is different, every city is different, and every state is different. So even though you can say these things nationally or about the West in general, what is true for the entire West is not always true for San Diego specifically.
Always got to zoom in on your actual market that you're in.
Yep.
Absolutely.
Yeah.
Well, the good thing is we're talking about affordability, and the reason why I bring up McDonald's, they just got a big pay increase.
Yeah, I saw
$20 an hour.
Yeah.
You know what I mean?
Well,
Thanks,
UPS
Mr.
has
Gavin.
got a big one.
UPS
drivers. You got the United Auto Workers right now on strike. You have Hollywood on strike. I mean, so there's going to be increased costs like kind of going through the market. And again, are they going to roll that back when inflation goes down? No, they will not.
Of course not. And that's the reason why we're starting to pay more for things.
Yep.
Because the more a company needs to pay out to a certain person, there's more carrying costs, and therefore they got to pass on that to the consumer.
Right.
And that's what I'm saying. I'm going to pay more for my hamburger and fries. Those golden fries are the best, though.
Yeah,
they are.
Yep. So anyways, the articles talk about the nation as a whole, home values have hardly changed since last year. Well, I mean, again, where are all the fear mongers? The sky is falling. Where's this great crash that's going to happen? And this is because of the rebound effect. And this is what I wanted to close. My final thought on this for you guys was, I look at my own home value every single month when I get the home buy report, and there was a slight dip in the price by like 9%, but then it went right back. So now it's exactly where it was like a year ago, June of 23 to let's say June of 22 to August of 23.
No.
It's right back where it was. So it might have been that place. So this whole idea of, home values have hardly changed. That's right. Because any correction that happened has already been recovered in a lot of major markets.
I've seen that too. It's crazy.
So